So, so the point is like when you have such like a huge sideway consolidation, okay, you see what happens here is you had Meta has been, went sideways for a very long time. And now from here, what it's trying to do is trying to form a five-way move. Okay. So where we at on Meta now? We have five waves up, three down, up to the 50% retracement. And then from here, we have five waves up. Now, five waves up is right to that 100% mark. That's exactly what we want, right? We don't want to have a shorter wave three. It has to get to minimum 100% relationship of wave one. The ideal um, upside target of the wave three is always going to be 161.8. In this case, okay, it only managed to get to a 100%. Why is, and then what we looked at, like if we just had another sideway consolidation here. Okay, we just talked about this. Five up, three down, five up, price is trying to go sideways again. So what I'm willing to do now is I want to take a shot here, okay, because this consolidation here is from October, went all the way down here until November. And now we can see if Meta can push into this another five smaller waves to complete this five-way move. So the plan is that this move, now again, this is a fourth wave. Now the fourth wave here can torture you as well because these are nasty waves, especially the fourth wave. Fourth wave can, I mean, I hope it is done here because this is right at that 38.2 retracement. And then it got the bounce to the upside. And remember, now we have a double top here. You see, we have 601.20 high on this X wave. Meta all-time high is a 602.95 as well. So we have a double top. So that double top right there is going to break. Now, a double top or a triple top on any price action usually breaks with a third wave because the third wave is going to be a longest wave, right? So yesterday, as soon as Meta get to this 585, I was like, you know what, let's get into this trade. At least I can start a position here. I mean, the worst case is that it could take one more leg down to 580. Okay, so the 580 we have sitting at 38.2, and then we have a 50% at 575. So we have some room here for this wave two to breathe. If or this is all of two. Okay, if that's the case, Meta can just make a move higher, from here. So I hope it does. I mean, if worst case, again, if it's going to come down here a little bit more, then we just gotta have to either wait it out and just to see where it could find one of these, um, one of these fib support, and then we'll see if we can, make a move higher. Meta works really good with fibs, just like all Mag 7, okay, regardless what you um all the Mag 7, like Nvidia, like Amazon, Apple, Microsoft, like these stocks are very steady stocks. So if you have a right wave count, like if you count your waves right, and they're you're gonna see a pretty good reversal from some of these key fibs. Like if you like look at this 50% retracement, like almost to the penny. I mean, when you have a wave count, if you count everything right, which is just gonna take you a very long time to learn all this. But if you count your wave count right, and then if the price does manage to come back down and it did manage to hit one of these fibs, and there you can get the, move higher, is you have a pretty good wave count in your hand. Uh, so this is a plan for Meta, is to see if we could break this double top, see if we can make a move higher. Now, the 78.6 is where the price backed off. Remember, this is everything. Okay. 78.6 is always going to be a last resort, to the upside or to the downside. You're gonna crack this, you're gonna travel, you're gonna move up to the upside pretty fast. So you see, it's always gonna price always going to back off as soon as it's gonna hit this 78.6 fib. So for now, um, this is a 1 hour chart. Um, let's see how it goes. I mean, we have plenty of time. We just opened a trade yesterday. We'll see if we could clear this, if we can manage to move higher in this third wave and just to take out this double top. That would be the ideal move. So for now, I mean, I have a projected upside, all whatever the fifth wave is. But for now, we need to fit 5 smaller waves into this fifth wave, is to complete a 5-way move after a triangle. So that's the plan for Meta. I mean, the invalidation for Meta was down here. So you have wave 1, down in 2, up in 3. Here's your 4. Your fourth wave must stay above your wave 1 high, which was 544, and the low was 555. So it was a pretty good risk to reward entry on Meta here. And this is your 38.2, and this is your 50% retracement in wave 4. And because this was a stock that got sold off right away when election the the result came out. So it recovered. I mean, it went right back up. So I mean, I like it. So the trade that I put it on yesterday is to see if we could uh, we can make a move to the upside. So that's the plan for Meta. Yeah, I will. Yeah, of course. I will let you know what I'm gonna buy. Yeah, it's gonna be everything um up on a sheet. So remember, again, next year the Excel sheet that I've been tracking, and where I put all the trades and everything, is going to be a new sheet for next year. So whatever I did this year that you see on the Excel sheet, all the options on that. Remember, I talked about 70-30 portfolio. 70% stays in stocks, 30% you do your options. So it's the same way I manage my own accounts, and that's how I do it. I stay invested in the 70% and I keep hedging with the option trades. So it all adds up. So if you do that for 6 months or so, you will see the result. You will see exactly what I'm talking about. So if you have 1 or 2 or 3 trades on the stock portfolio that's starting to come down, because remember, every stock is different, right? Different wave count, different wave structure, different RRG. So, I mean, every different company is different earnings, whatever So, but at the same time, if you have 70% invested in a stock portfolio, this way that you always have an upside exposure, but at the same time you keep hedging with options. Options are either you're taking longs, you're either taking shorts, So those are your could be swing trades, could be your day trades, could be anything. So, but the point is that you stay invested 70 all the time, okay, in the market. And if you happen to don't have an option position open, or if you might say like, hey, I'm going on a vacation and or I'm going to be busy at work, that I am not going to be able to trade for a few more days because I got a bunch of workload. But that means that you just given a break to your option trading, but you're 70% long your portfolio, that if the market does rally, okay, is gonna benefit, so you have upside exposure. You know, I hope you get my point. That's how I've been doing this for I don't know how many years. Um, because you have to look at this way that if you have a $50,000 account, right? But if you have a $50,000 account and if you're risking 1,500 bucks per trade, so then what are you doing with the next rest of the 48,500 dollars that you have sitting? Nothing, right? You have to put money to work. So being buying shares is a little bit more less risky instead of options, because options is you have the options are more risky. It's just like because you're fighting time there every single day. You just like the trades that I have here is like, okay, well, I have 42 days, okay, until expiration. So the reason why I want to buy a bit more time is first because I'm in a fourth wave. A fourth wave can I'm well aware of it. They can it can go sideways, okay? And if it does, then you're just losing time, you know? So if you have, I mean, Meta is a strong name, it's a strong stock, it's an over $1 trillion market cap company. So they already reported earnings, and the point is like Meta can just make a move higher, and if that move can happen in the next 42 days, I'm good, you know? So options is basically you just sit and, like if I will buy shares, but at the same time, it's a $588 stock. Like how many shares you can buy? I mean, if you have a smaller account, well, you have no other choice just to trade options. So, but the same time, you just make sure that get your accounts set up right so you could be able to day trade, you could be able to trade spreads, you could be able to trade futures. Okay, you should have them. I mean, it doesn't cost money to have those tier two approval. You just need to call your broker and say, like, hey, I wanted to trade spreads and I wanted to have a margin account. So just kind of because not every single trade has to be a call option, because a call options that you're buying, because every time when you pay for the premiums, which could be a 40 days, yeah, you're going to pay a little bit more because you're buying more time, but you're going to have the the time decay on you. So I mean, if this thing can pop on Monday, I mean, we're in excellent shape. So we're really not giving up that much time for this breakout. And if this thing can take another 2 weeks for not to break, I mean, now you gotta add that 2 weeks worth of theta into the premium that you paid for the position, you know? So that it gets a little bit more tricky when it comes to these single play options. So there are trades that I do take that I will just buy a few calls. I mean, those are like depends where we at, especially on like on a wave count, what kind of a shorter kind of swing that I'm looking for. But the point is like every trade is different. You cannot say like that any option call that I'm gonna buy that is just gonna play out exactly the way I want it. It's not that's not how it works. The buying time is definitely helps, and doing spreads is it's the best way to go. It's just the right way to trade options is to trade spreads. It just because you diagonals to the upside, like you can just tilt a bit more to the upside. That is the ideal strategy to play the upside is through the diagonal play. Diagonal will literally wipe off the entire time decay for you. It will just give you whatever delta that you wanted to carry, like take to the upside, that will you just stay flat delta. So because you're selling a front dated call, which is on a shorter time period, against the one that you're buying one long, right? So your long one and your short one, the short one that you are is up front. So that will decay faster compared to the calls that you have the bought, which has more time to it. So that eliminates the entire theta for you because you're short. When you do an even spread, now the even spread, the vertical spread are in the same expiration date. So if you wanted to go out 40 days, whatever, November 15th, so you have to buy one and sell one on the same November 15th, you know? So diagonals are really, really good, but diagonals are more debit play because you're buying calls and shorting one. So your premiums on that one is always going to be a little bit more than your vertical spread. But you just gotta have to adjust with delta play. It doesn't matter if I could pay $800 premium um, for uh, for a diagonal. So if I pay $8 diagonal premium, that only gives me 15 delta. So I'm looking at a $15 move for a 1 point, but I'm paying $800 for it. So if I pay 16, that 12 can be whatever the delta is, 15 could be 30. So delta is everything. You just gotta have to adjust with your analyze tool to see like, okay, yeah, if I would trade 4 contracts, that would cost me $3,700. But in that $3,700 that I'm paying for it, am I getting 35 or 40 delta, on a trade? So yeah, you have a big chunk that you're going to pay, but at the same time, you just have to look at like, okay, if the stock goes down 5 points, well, you lose in only 30 times five because you long 30 delta. So diagonals are really, really good. So the even ones are a little bit like Costco, just kind of ripped. We'll take a look at them. It just finally made a move. I was really hoping for Costco to kind of chew another week, but retailers took off a couple days ago, and so a lot of these, and then Costco is one of the strongest name, and it just is always going to move faster, much faster than the other weak retailers. This is Meta, and then Google. Google is so now the Google and AMD, if you look at them side by side, okay, we just talked about this. You see this decline right there that AMD had of 46 versus Google had 23, right? So it's half of it. But this, if you look at them, the structure, okay, it looks the same, right? So you have a neckline. Same thing we just talked about, double top, right? Same thing we just looked at on Meta. So here you have a neckline. Here you have your head, the head and the two shoulders. And you have a three-wave decline, channel broke, managed to put five waves up. Here you have a three-wave, little choppy little decline. I can only do it as a WXY. Here's your fib support zone right there, 78.6 near that 100, 161 and 38.2, which is 2 versus 1. And went up right to the neckline, got another smack, another got rejection, went back up, backed off, made another attempt up till here. That's when the earnings came, and it just put the gap right there for earnings. That's the earning gap right there. So it so the pattern did play it out, and what it did is like it put a new gap, and then this move here filled this gap right there. So this gap got filled. But then on the earnings, Google put this gap. And then from this decline, it just wiped off everything. So it just now it went all the way back, came back down to fill this gap. So now that is filled. So now from here, this is another downside gap. Look at a little messy right there. So if we look at this wave count, what I can see is if this is a 5, this is a 2, here we have 1. But if you look at an inverse head and shoulder, and same thing with a cup and handle. Cup and handle is gonna be like this. So you're gonna have that handle. It doesn't have a handle. Okay. You could make a case here like this, but you missing this handle here, right? So that doesn't work. So either case, if you have a cup and a handle, the measured move is at least a 100% of the depth of this cup with your handle. Okay. In this case right there, you're 100% sitting at 185. Okay. So it's I mean, if we look at a price right there, kind of you can see like it's kind of a bit of a whipsaws here, like up and down and up. Um, what we could do, or what we can expect and hope, I believe, is to see if we could try to see if we can make our move higher. Um, Meta, Google, and Netflix, these are communication sector stocks. Okay. I mean, these are all three top names. So, I mean, I don't want to really, I can do this, a same way like I did with Meta, but sometimes it makes it really difficult to kind of fight these smaller waves, because the best way to have a wave count is once you have counted your 5 waves with your 3, and then you project the upside and you just leave it blank. You know, because in order to complete a third wave, to 161.8, you need to fit 5 smaller waves to make that third wave, right? You have 5 up, 3 down, then you need another 5. Then you need another 3 down and 4. Then you need another 5, you know? It's the sequence that way it goes. 5 up, 3 down, 5 up, 3 down, 5 up. It's a fractal nature of it's just Elliott is very, very fractal. So from here, my plan is that Google, well, first of all, Google closed the week with an inside weekly bar. Okay. Why? Because Google last week low was this. So this week, with the election and with the rally that we just had, see the week open somewhere around here. I don't know, the open price doesn't show here. And it gapped up, went up, but it didn't really break above this 182 mark. So the price just managed to stay between 168.07, which is the last week low, and the last week high was 182.02. So it didn't really break above, or neither does it break down. So it's called an inside week. Okay. Price just circling around here. So if we have whatever the case is from here, is to see if we can put up a higher weekly bar for next week. So where we at 178.48. So in order for us to have a higher weekly bar, we need to break 182.02. So once we break this to have a higher weekly bar, it's going to have a pretty good chance that we can get to 185. So we would have an answer on Google next week. Okay, because I mean, expecting another weekly bar, meaning that now for is to have 2 inside weekly bars. Those are, I mean, it can happen, but is not something that normally you see in Mag 7s. Like big names, like they could go sideways for 1 week, but they'll find a way the next week, either up or down. Okay. So for the risk point of view, I mean, that's what I was looked at. I was looking at it yesterday. I was like, does kind of make sense that we're ending the week with an inside bar, and to see if the next week we could get to 182 mark, and then from there we can at least trying to get to this 185. That is what I wanted to, this is what I will be for now. So look, the the upside targets and those are all good. I mean, I can show you this. I mean, I can open all I have to do is just slide my hand up and down like this. You see? So you don't like lay out wave counts like this, but that you just all you're doing is just like you're giving a big hope. And because when you are sitting and like trading and you have your expectations like, okay, here is my target and this is what I think that, this is where I would expect the price to reach, at least to this. I mean, let's get there first. Then we'll worry, then we will worry about more upside. But having upside like this, but you at the same time you have to look at this way like that's a 13% upside. Okay. This right there is going to be a 19% upside. Well, well, first of all, like, what makes you think that is gonna happen in a week or 2 or 3 weeks? You know, but you start looking at time here as well, like it's a 1 hour time frame. Each bar is 1 hour, and every session, like, every day session is a 6.5 hours. So 6.5 hours, how many bars you're gonna get? Six, and then you're gonna get half of it, and then you just close and then the market closes. So how much you think your wave count moves? Like, okay, like if you expect this move 13, I mean from here to here 14.91. You see, it's like 13-14% move. But then if you are making your wave count and you wanted to have 20% upside, I mean it can happen. I'm not, as long as stocks starting to make higher highs and higher lows, but it's going to take a lot of time, you know? I mean, this is why I don't show these big upside prints. I can open any upside. I was I was doing this thing yesterday on Tesla as well, if you notice. I was like, okay, if here's a zone, if this breaks, I know how to open more upside. That's not a problem. I have every fib that you can possibly imagine. Okay, it's all programmed here in Motivate. So yeah, having like massive upside projections are, yeah, those are good. I mean, they look beautiful on a chart, but it's gonna take you months and months for to you know to reach that point. So and it's not 100% either that you're really gonna go and hit that to the mark. I mean, you could be, if this is the third wave, let's say a one, two, if we have one, five up, three down, and then you're trying to fit this fifth wave. Now, what happens here that if I see it, you see right there the length of this wave one, you have an extended first wave. Okay. So when you have a smaller extended first, and if you have this wave two, and if you do trying to make a move higher up in three, okay, which is at 190 plus, to this mark, then you have the fourth wave. Your fifth wave is going to be shorter. Why? Because you have an extended first. When you have an extended first wave, your fifth wave is going to be smaller. When you have a shorter wave one, your fifth wave is going to have extension. Just remember that. Okay? So because remember, wave one has a relationship with wave five. If it's going to extend, if you're going to have an extended wave one, you're going to have a shorter wave five. If you have a smaller wave one, which I always talk about with those diagonals, remember? Diagonals in wave one, a lot of time, diagonals, when you're going to have them in a wave one on any degree, is going to have extension in the fifth wave. These are the prices that you just have to memorize, and you just have to either write it down on a piece of paper that you will remember that. Okay, that will help you a lot. Okay, extended wave one, shorter wave five, smaller wave one, extended wave five. Always, it doesn't mean that it would exactly be the same every single time, but if if I could say that it's gonna have, let's say, a little over 70% probability that it's gonna happen. Okay, I wouldn't even say 50, so over 70, I would say, because as many years that I've been doing Elliott, and as many, I don't know how many millions of wave count that I've made over the years, there is relationships of wave structure that I am very, very well aware of it, and I have a pretty good experience and knowledge of how Elliott behaves and how it works. So you know, just giving you a hint. That's all. So again, we got long way to go there to expect that. So I'm just trying what my plan is for next week is to see that we ended the week with an inside weekly bar. We would be watching 182.02. You can put a price alert on your chart here to see if we can clear this. If this alert goes off, then we'll have a weekly higher bar. That weekly higher bar will have a pretty good chance that we can get to this 185, which is going to be a 100% relationship of this wave or wave two. So for now, and if we get here, then we'll worry about the upside. Okay. Um, these are the three positions. What else do I have open? What is that? Oh, I was working this at Eli Lilly. I was working on this one yesterday. It's not ready yet. I gotta finish up this wave count. I started making them yesterday. I gotta work on them a little bit more. I wanna I wanna own this stock. This is NVIDIA of pharma. Very, very strong name. It got a bit of a took a bit of a hit. Just I gotta finish this thing up. Um, it's not ready yet. I'm just working on a few things. What else do I have? IWM. Um, I mean, everywhere you see this week, you're gonna see monster acceleration gaps that we just put it here. Here you have a massive gap here on the election night, the next day when the market opens. Um, I mean, we have a three-wave decline here, five up, three down, another five up, two, one, two, one, two, three, four, five. And now what we're trying to do is trying to complete five smaller waves, okay, fit in this wave three. So it's very hard to believe that IWM is near the all-time high, you know. At the same time, the yields are rising, and so does the IWM. But now we'll start cutting rates down. That would help small caps. I would small caps for next year. It looks really good to me. Okay. Because at the same time, Trump, he just says it's cut the rate down to zero. He's that guy. He hates higher rates. And 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 Fed made another move. So these small cap companies, okay, they will get a bit of a relief break. Okay. But again, it doesn't affect right away. It takes time. You have to Fed makes a decision, cuts the rate. Now these companies who are borrowing money are gonna it is going to help them, but then you just have to wait for their earnings. And when their earnings starting to get better, meaning that their balance sheet is starting to get improved, it's looking good now. So I I like I mean I'm just gonna stay long IWM instead of chasing these individual small cap companies because they're so difficult. Their stock can look so promising and so good to the upside, but at the same time, they just companies struggling and they're not even making any money. But you have to remember this that it's almost 80% of companies in a small cap out of the 2,000 stocks that just are all rats. They don't make any money. So they have a negative EPS. So, I mean, it's very, they, I mean, what they did, like how they SMCI was the top stock for Russell 2000. It had a massive move to the upside and then just pulled it off, and then they split the stock. There are some good names, in small caps. They were starting to help the overall index. They just start taking them out, one by one. And now they just pushed everything, all the good ones, into the cash cow 100 stocks, you know? So those are the 100 companies are the most, like, they have a good balance sheet, and those are the ones that are actually making money and their stocks are performing over the years. But the rest is just, it's all garbage. Your GameStop, that Ruben married to that stock, um, the GameStop, and like these are all meme stocks. They're all in that Russell 2000. I mean, what do you expect GameStop to report any kind of a solid earnings? I mean, what, look at the business structure, you know? So like Kohl's and AMC, and these are all in Russell to this is where this index is flooded with these names. Regional banks, all these smaller ones, they bought so much of these bonds, with those people's customer deposits, with these such a higher rate. Now they're stuck, you know. So you're buying bonds at a higher rate when Fed increases rates, because banks, they're not keeping cash in their vaults. They gotta have to invest that cash to make the return. And then here you're gonna start cutting rates. Now you paid more for the bond, and now the rates are starting to come back down. So what do you think is gonna do to your bond? You paid more. It's the same thing like buying a house. You paid $500,000 for a house. Now your house worth $400,000. Okay, well, how are you gonna close the $100,000 worth of a gap? Or you paid 500, now you're getting 400 in return. It's the same concept when it comes to bonds, with the yields. So you can, yeah, I mean, at the same time, I mean, what else are you gonna do? You have to you have to take risk, and you have to make the right decisions. And where you make wrong decisions is where it's gonna cost you the money. Same thing happens in trading as well. Okay. So remember, I even wrote this thing yesterday to the guy. I was like, listen, I was like, trading is only all this is only 5% of your work. Okay. 95% of your trading is all about your mindset. So you just have to look at this way. This is 5% of my work. I can make any way, you give me any price, any chart, I can make you a wave count. That's not a problem for me. And being in the trade, that is where the real test comes into a play. That's your mindset right there. That's where your emotions are going to be. And should you stay in? Did you exit the trade? Did you trim half? Did you add more? Did you just hold it? You see how many decisions it comes when you put money on the board. Time is running, price is not moving. You just, it's starting to frustrate you. It's like, come on, break this. Well, it's not. This is why you have to look at this, but you're playing a probability game. Okay, this is only a probability. There's no such thing that could be that. Yeah, I mean, there's there's a lot of trades that I've given you guys as well, that the minute that we put a trade on, it instantly moves right away for the next candle, and it never backs off. Right. And there are some trades that it takes time, you know, but it's okay if the trade, I mean, it doesn't mean that well, yeah, five of the names are up, and like you'll be probably sitting and thinking like, man, why I don't have any trade open on those stocks, and mine is just sitting flat. I mean, I'm pretty sure that everybody went through this stage. Yeah, it's normal. Well, those five stocks that are moving right now, they were sitting for weeks doing nothing as well. I have to look at this way. They were not just, it's just that particular day that happens for those stocks to move. But you have to look at their price structure to see what the stock they've been doing for the last couple of weeks. Imagine if you were sitting on those days on that stock. So so don't look at everything the same way, like, oh yeah, this stock is moving. I mean, I wish I would have been in there. Like you cannot be in every trade. It's just near impossible. It's too much risk, you know, too many positions, and having that many positions is not easy to run. Um, so here we hit a beautiful third wave right to the 161.8. Now, are we willing to set back in four? Okay. If we do, then the price must stay above 227, which is your wave one high. Okay. Remember, we need to fit five smaller waves to complete a blue third wave. Okay. Make some bit more room here. Or the second thing is on IWM, now we have all-time high, which is 244. We haven't hit that one yet. So this is where you have your massive, I'm gonna go all the way back there, resistance. This is where you have, again, your largest percentage decline or whatever. No, sorry, this is where you have started the bear market back in 2022. Okay. So either this third wave here can get to 200% is possible. Okay. Regardless what the case is, okay, my minimum upside target of IWM is 250. Are we going to set back, then make a move higher to take out this high and then we get to 250? Or do we just get to the 200 from here? Or we can just do this because the third wave here can go up to 200. If we get to 200 and then the 244.46 will be a couple pennies away. Okay. So if we get here, I mean, this is a 2020, 2022 top. So you're going to have a massive resistance here. If do we set back here in fourth, then make a move higher, okay, to the 161.8, which is your third wave. Then you got, if you're going to break this huge resistance zone, you're going to have to make some room to the upside. You don't just go up here, reject. If that happens, then you have a double top. Okay. So you just manage to went all the way back up, put up another top, you got the rejection there. Then the price has to find somewhere, support somewhere, and then make another attempt to crack that double top. Yeah, and indexes and ETFs, they don't just ends everything up on the double top. Okay. Yeah. You can show me in anywhere if you like, but that's now that's not how ETFs work, because ETFs is a basket of 2,000 stocks. I mean, the same thing with XLF and the XLK and the ETFs are just SPY. I mean, SPY, that if you own SPY, I mean, you technically have 500 companies of an S&P in that ETF. So there's a lot of stocks in there which are based on the market cap that would come out with some strong news or some strong fundamentals, and just to see if we can clear to the upside. I'm staying long. I'm not taking anything off. So I like to just have an exposure in IWM, small caps, again, which just I just talked about instead of hunting down these one by one individual names, I'd rather just own a full basket of stocks in 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 one ETF alone. Um, do you wanted to see Amazon? Amazon. Well, this is one. 2 hours to 1 hour. Um, Amazon is good. I didn't update this one. Uh, yeah, Amazon is right up here in this third wave, so this is the same way. Like if you start 24% decline, they're pretty similar to the Google. Google had like 23% decline. This one has 24. So you just trying to make a move back up. I mean, this is months and months of price action. This is, I mean, you're looking at a 1 hour time frame, which is fine, but you have to always look at the bottom right there. How many months of price are you looking at? So if it's a 1 hour chart, I mean, a 1 hour wave count, I mean, this thing can go all the way up to February, so, you know, so it could, it's going to take time, but I mean, it looks good. Higher highs, higher lows. Wave count looks good. So you got 3 wave decline here. You got 5 up, 3 down, 5 up, 3 down. Now from here to come to make a three, okay, from here, um, you need to fit 5 smaller blue waves within that three to complete this wave three. So I mean, it looks good. That was the all-time high. It's going to become a major support now. I thought I updated this thing yesterday. Sometimes I do Elliott and then I'll just gonna take off. I really don't even look at them. And then I will spend another like hour and a half doing some, and then my main focus always on swings, to be honest. It just saves me a lot of time. It's a lot of work. Um, counting this back and forth. Um, can we do this? It's totally possible. So basically what we need to do now is, now this one right there seems a little bit bigger, but it's not. It's the same. I measured it. I think if you look at a smaller way, that's 7.72. 7.72 against whatever. This is 6.5, 7.38. So if I made this one here truncated, because if you measured this move, is this is smaller. Looks kind of bigger. I kind of had a little bit of a doubt putting 1, 2 here, because then I always measure just to make sure a wave count has the right look. I was like 7.72 versus 7.38. I was like, I can live with it. It's almost the same. So yeah, you don't want this to be like this. Like if you would have a smaller wave, one smaller degree goes to 9.8% compared to your one the higher degree. Yeah, your wave count is gonna look weird. You could, a one smaller degree always should stay smaller in magnitude and length compared to your higher degree. If that's the case, and if the price resume to the upside, your wave count is going to have a much better look, and you're going to have a much better art for that wave count to play out into your favor. Because if you start labeling your smaller degree wave counts a bit more bigger, you're not gonna run none of these projections. It's not gonna work, you know, because your higher degree, it's smaller than your lower. It just doesn't make any sense, and it is not gonna work. I can tell you that for sure. So in order to hit these prints, how I have this thing, because these ones right there, I had it projected while price was lingering or somewhere around here. But you see like how the price went up there? It's gonna hit that mark one way or another because I count this thing right. So you got 1, 2, 1, 2, smaller 1, 2. And then from here, what we can do is we can count a small 5 within this 5 to complete this 5. You see how many subdivisions do you have? And the yeah, I'll share. Yeah, just one of that. Yeah, so what we can do here is, let me turn this thing to a blue, is to see if we could, so we have 1, 2, 3, is some sort of a fourth wave right there. And then from there, we can get to 261 point. That's going to be extended right there. Is to complete 5 smaller waves within this 3 to complete this green. It doesn't mean it has to get to 261.8, but it could stop anywhere. But the ideal upside target for Amazon is 217. Okay, which is this. It will hit one way or another because it already cleared 78.6. You have 100% here. That's your 127 here. And you're gonna crack this. You're gonna go. You have a 90% chance you're gonna get there from here to here. Okay. I know how fibs work. Okay, so and you guys seen them as well. How they work. You know, and it took me years and years to learn, but but it works and it pays off, and it's been paying off, and it's a lot of work. And there's some certain key fibs and it have some Fibonacci's, some, you know, the square roots that, because anything you're looking at to the upside is projections, right? You're projecting the price to the upside. And when you're coming down, you're looking for retracement. That's all. That's how you trade price. You have upside projections, those are your targets, and you have your downside retracement, so that's where you find your entries. I mean, it's not a rocket science. I mean, if you really talk about it. But going through these individually, where you could spot your entries and stuff, that is, you see from here, like once the wave count's trying to resume, you start moving these stops higher and higher. The first it was here because you don't want to have this second wave to go below your previous degree lows, because this is a smaller wave. And now the price broke to the upside. Now the stop goes here to the wave 1 high. So whenever the wave 4 is come to a settle, I mean, these are still kind of a bit low, but now for this 5-way move, okay, you want to put your stop loss on this one up to here, but you don't want this 4th wave to come back like this. So that's the case. But again, these smaller waves, this is degrees, the subminute, they're very difficult to, like this degree right there is minute. The subminute, you have to complete 5 subminute smaller ones to make 1 minute. It's a little bit in a banner right there. It shows you the degree. What degree is that? And then once you will have this green 5 is to complete your this minute. This one will complete your this degree minor. Come on, here, minor degree. It's a lot of subdivisions. And then when you in a trade, and you just like thinking always like, is it a 3? Is it a 4? Is it this? Is it a 2? No, just leave the way it is. You count your 5 and 3 and you just look for projection, leave the wave count. Just wait for it. So the price will, if the price will make a move higher, it'll get there. How is going to get there? How is going to make these smaller subdivisions and how many dips is going to take? Well, just don't look at them. Just give it plenty of time for your trade to play out. That is your destination. Okay. If you're starting your journey here, right there with your 8 waves. So remember, 8 swings that you need. 5 up, 3 down, in either direction. If you have 8 swings from a low price, I mean, you have a pretty good chance for price to for continuation. You can have 8 swings to the downside. I always talk about it. 5 waves is nothing. Elliott wave hardcore, basically their rule of thumb for a trend is a 8 wave, 8 swings. But a lot of most people expect like, oh, we got 5 waves decline. That okay, that doesn't mean anything. If you have 5 wave decline, you still need a 3 wave counter move to the upside or to the downside. Remember, every 5 wave, it will correct to the downside or to the upside. That's the beauty of Elliott. What else we have? Tesla. That's the one that's going nuts. So we did Meta, Amazon, Eli Lilly, you gotta finish. Google. So AMD, Google, Amazon, Meta, IWM, Tesla. Um, where's my working? Okay, here's a daily chart. Um, it's going nuts, and Tesla, because we all know that it's been such a sideways stock for such a long time. You're talking from 2021, okay, up here. Here it is. Yeah, November of 2021. I mean, this is years and years of punishment, right? Everybody knows that how frustrated and how nasty this one larger degree fourth wave can be. You have a third wave right there to a 161.8 spot. This is the typical ideal a golden ratio of Elliott wave is where you're typically your third wave comes to an end. It could extend to 200 as well, but it went up a little bit more, which is okay. And then it's just, you know, a punish sideways torture for years and years. Um, I had a guy yesterday trying to tell me that, but first of all, this is a very advanced Elliott wave. Okay, this correction that right there that I have this labeled as a flat zigzag and a triangle and Y is very rare. It doesn't mean it's wrong. It's right. Okay, because I know what I'm doing. If if this wouldn't be wrong, this wouldn't happen. Okay, let's just put it this way. I mean, a lot of people, I'm just gonna give you my, well, I'll tell you what I see, and a lot of people out there, you will see they're making this as a triangle. Okay. You could do that, but the issue with this is this. I understand you have A wave this huge, B, because it's just a symmetrical triangle. That's what they call, right? So you have A, B, C, D, and this is all of E. Now the point is like if you start look at the time here of A to B to your C. Okay, so you have an A, B, C, and then you have your D here. And 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 this is all of C, E wave, compared to these ones. I mean, E wave typical retracement on a triangle is always going to be 61.8. That doesn't fit here. Okay. That doesn't fit here. Is way shorter compared to your D and E and B. That's one thing. And if you do make that contracting triangle and do put an E wave here, okay, now you're gonna have a problem. Why? Because this move right there cannot be counted as a 5-way move. This is a 3-way move. Okay. Why is that now? Let's say if you can do a 1, 2, 3, 4, 5, like this is a typical, I can just look at it. I don't even have to label anything. Let's say you really press this thing as a 1, 2, 3. Here's your 4. Now you have an overlap. That doesn't work. So how are you going to count 5? That's the problem. You know, it's very difficult to count this as a put a 1, 2 from here, and now you're looking for a 3. It's not gonna, if I cannot count it, nobody can in the nobody can. I can tell you that. Um, this how I have this thing labeled, it makes the most sense. Here's your flat. Here's your zigzag. 5 up, 3 down, 5 up. Let's subdivide this one. Here. So you have 5 up, 3 down, 5 up. So that's your zigzag, right? Flat is what? 3, 3, and 5. Zigzag is what? 5, 3, and 5. That's your zigzag. This right there is your triangulation here in wave Y. Okay. Now this E wave, look how where it landed, 61.8. This is the typical ideal retracement for an E wave. And this E wave must stay above your C wave low. So you have like 182, 92, 210, 20-point window. And you have your 4 versus 3, 23.6 merge here as well from here. Then from here, you see, you broke this triangle wave D right there, which was a 264. that gives you the confirmation for a triangle. It did here. It went up to this B wave 271. The high here was 273.54. It backed off. Okay. It's now from here, from 212.11, we're going to focus on 5 waves to the upside now. Okay. We're not going to change this thing now. I already project everything, what I needed to, what I want to project, right? Basically what it, what the projections are. That's all here. So the price broke above 264, cleared 271. That's where the election gap came, went to 100%, 299.29. This is where I sold 175 of my shares from this 150 price. This price is not here. Actually, it's here. I mean, I've taken some crazy round trips on this position. It's actually here. What I bought Tesla. He was selling this one. And then from here, position all the way went back up to this 300 mark. So I was up from here to here. And then from here, look at this, went negative. What the hell? I mean, 52 grand. I put 52. I made 52,000 here to 300. Gave 52. Went negative. I was like, you know what? Screw it. I'm gonna just hold it. It's like I know it's gonna be this is a fourth wave. It's gonna end one day. It's just if it's gonna go up another year, fine. But I was trading Tesla with options, so I was keep hedging them. So I wasn't really down. I mean, I was up, either my shares were down, but my overall Tesla position was up because I was trading with you guys and stuff with multiple option trades. So I keep the shares on one side and I just keep hedging it with options. That's the only way you're gonna own this stock. This is a different stock. This is not something that you're just gonna buy leaps and or buy shares, and you just have to keep hedging it with options. But if you are not in options, if the stock does move higher, you have shares that can rally, that can pay you. So you don't have to be in the option position all the time, So remember, I talked about that 70-30 way to play your account. 70% long exposure, 30% option premium, the option gambling, So you just keep hedging them. You can buy puts, you can buy calls, you can leaps. Leaps will go into your 70% because you buy a lot of time. So you can do it that way. It will work. Okay, you can give a couple months, you will see the difference in your account. So from here, we don't have to change anything here. So we reached 299, went to 308.06, and we went to 78.6, which is 323. So that is going to be a tough one. Remember, 78.6. Okay, so from here, upside 360, lines up at 359, 397, 401, 408, 408. So just one by one, you just keep looking at these prints. How this subdivision will unfold in the coming weeks. I'm not wasting my time here at all. Okay, we're just gonna leave the way it is. We have our upside projections. These are our targets. How the wave 3 is gonna go. Then we're gonna come back and forth, and then we'll come back and forth. Could be a triangle for several weeks or months. Okay, so we don't know that. You can't think like this, that your beautiful wave count is gonna go your way. So what we will do is, now the point is that the stock has been sideways for a very long time, is going to make a monster move, okay, one way or another. Because once you have a price that consolidated for such a long time, went sideways, is gonna move. So that, I mean, I only have this thing up till here. I mean, this is not going to be all of 5 anyways, because when you have such a huge sideways fourth wave that lasts, I don't know how many years, you don't just make a 1 5. I will open more upside, but now I'm good. But for now is but for now is good. So, oops. So we don't have to do anything here. What we will do for our swing trades, we will spend time here. So what we're gonna do is the same thing. Remember the E wave, 212.11, right there, 212.11. So we're gonna take this price structure from here, and we're gonna start looking into a smaller time frame. Is where we could find our trades. Remember, we just need to go a same way to a 5 waves, which is the same thing here. Okay. But this is just, it looks blue, but it's brown over there. So what we can do here with Tesla, like how this thing has been going, and yesterday, I mean, I've already removed all those fibs. We finally get to that 261.8, is we just took a bit of a back, took a little backed off a little bit here. Now, I don't know about this wave 2 is gonna be, it can happen Monday, Tuesday, or whatever the case is, or it can just continue to the upside. But I don't have anything here to the upside yet, right? Because we're looking to see if we can get a little bit of take a bit of a breather. But when we're gonna go here, we know that we're sitting right at that 323 mark, which is 78.6 ups, mark. So 78.6, we need to keep this area as a resistance on that time frame. And here we have a 328 print. So we're close. We're almost there. Now, if we break this one, and if we don't set back, what we can do is to extend this thing higher. Okay. So I have to just make some room here. So what we can do here is, oh, come on.
Tell them I'll tell you when you use it.
You can just make it like this. It's smaller waves. This is all continued to the third. You can do it that way as well. So we don't know that the way this stock is moving, because Tesla, once it moves, it moves. Okay. So you can do something like this as well. So if this is, you see, wave 2 fits right there, that 2, 3. You have a gap here, which is, I understand that, which is fine, but the price starting to make these higher highs and higher lows now. If this is a case like this, and that's your third wave goes up like this. Okay, so this is possible as well. Okay. So, but instead of you fighting price, you just have to focus on these prints. But these prints not going to move because they're on a much bigger time frame. What you trying to do is you trying to fight these smaller waves, okay, to see how you're going to go up there. I can show you this thing in many different ways. You can just do it this. started from here. I mean, this could be all of what, I mean, this is how I have it. Okay. And this is how I have it as a 5-wave up. And then I'm looking for some sort of a breather room. So I'm just gonna go back to how I have it before, like this. That would be the right. That would be the way to do it. Like, it looks right. Tesla works really good with fibs. I can tell you that. Okay, but you gotta have to have a right wave count. If you do, I mean, this thing will work literally almost to the penny, but you just gotta know how to count. So I have this thing like this. Okay. So make this as a so 1 hour time frame. So a little bit tight. So you do something like this.
3, 2, 1.
The price has already accelerated quite a bit to the upside. So that's your wave 2. See wave 3 right at that 200. Here's your wave 4 came right at 38.2. Here's your upside projections right there.
Oh no.
Right there. 5 versus 1. This is where Tesla kind of hit the mark yesterday. 328.71 was the high yesterday. Look at that fib, 328.57. I mean, from here, you're talking 316. So from 328 down to 316, that's 12 points. I mean, the point is, like, if you label this thing right, this Tesla will literally give you a price either to the downside for your retracement and your upside projection almost to the penny. Okay, it's the same way with Nvidia. I mean, there's a lot of stocks that I can name it. Okay, I mean, um, they work really good. Adobe is one of them. ServiceNow is another one. Adobe, MongoDB, um, Nvidia, Apple, Microsoft, um, Amazon, Google, Meta, Netflix, like Mag 7 stocks, and I mean, there are a lot of other stocks as well. Can I really think of? Team is another one. Team works really good. MongoDB. What else did I? ServiceNow is the one of the best one. ServiceNow and MongoDB. These are the two stocks are works really good with fibs, but as long as you have a good wave count. There's several more. ExxonMobil works really good. That's oil. Any like the really good. I mean, those are not very huge companies, MongoDB and stuff. But like any one of the biggest market cap companies, will the price works really good. So I don't know. I mean, if this is all a 5-way move that we just had, I mean, this is going to be a wave 2. Now remember, 313 mark of Tesla, which is right here, makes it a $1 trillion market cap company. Remember I talked about, I mean, I told you this price a long time ago. 313, 312 or 313, doesn't matter. 1 point doesn't make a difference. 313 or 312
See,
is what makes Tesla $1 trillion market cap company. Once you hit a $1 trillion once you put a $1 trillion market cap crown over your head, okay, you don't just give up that fast. You know, I mean, this is gonna be the level because I mean, there are some, you don't just like go up, stays up for like a couple hours, is to hit that 1 trillion market cap and you just like backs off. You know, you just like it's stock will get to enjoy some of that, some of that time being sitting up there. So I would like when you have such a massive move, your retracement is going to be very shallow. If Tesla is volatile. Everybody knows that. And
you count down, you count down, you count down.
if this is the 313 mark for the market cap, and this is a 23.6 fib, which is a 3 or 5, that would be kind of like the ideal zone for now that I can think of. Worst case, that if it comes back down a little bit more hard, I mean, you're back to 290, 300 mark is people's gonna go crazy again on 300 mark. So the 300 mark is people's gonna start loading calls again. Because I think a lot of people had missed out on this run, you know? And this is the election pop. And then ever since, the stock rallied how much from
Fight, you have to fight.
election?
I know.
Yeah, almost 30%,
You have to- I'm about to-
right from the election gap.
You're gonna buy yourself.
So from November 5th until November 8th, 30% move.
Go buy that.
But again, you have this sideway mess. And how long you think that you're gonna stay? How long you think you're gonna stay sideways? Another 2 years? I mean, the fourth wave will break to the upside. I mean, that's the only way that I stayed in there, holding my breath over all these years. 3 years I took the punishment, to be honest, almost 3 years. I have other positions as well, so one or two down doesn't bother me much. So that's the story on Tesla. I mean, just remember this one, and then if price does kind of back off a little bit, we have our fibs on. And then from here, we could expect this 5 waves to sign to go. I mean, 1 hour is it's pretty good, so we'll keep an eye on him. See how it goes. Thing is this, that you can go long here. If you do get a retracement, you have to add more, But I don't think that the going into a trade, taking a bit of a punishment, adding more risk. I'm never a big fan of adding to positions. You guys know that, you know. You just if I mean, I know a lot of guys have a habit of like, I will average more. I would average my entry and I would do other half of this. I just never been my style, I define my risk. I know what I want to put into a trade. And if the trade's trying to go against it, if I have enough time, I'll just wait, you know? But I'm just not gonna throw more money into it. It's just you just if something is not going according to your plan, like slow down. I mean, find another trade as a hedge or something like, that you could offset some of the paper loss that you have, because if you have a position open, if it's down, doesn't mean that, I mean, it could turn around as well, but I don't look at it as a loss. It's not officially closed yet. The same thing, if you have a position open, it could be up $50,000. I mean, yeah, it's on a paper. I mean, it's not your money until you cash it out, right? The same way to the downside. The position is down, it's down. I mean, it could reverse next hour. It could reverse in 2 days. But as long as our wave count is right and manage to have a zone that could hold, I mean, the trade is fine. We have plenty of time. We just have to wait. So you're gonna be seeing two boxes. I have yellow one, green one. Okay. Yellow is where we look for entries. Green is what we target. But more like a cautious kind of sign, yellow kind of, because prices are coming down. So it's kind of like a bit more under pressure, and you just, so the two colors that I have. And then I do the red one is where I would make this whatever when I will see like like a bunch of fibs that's starting to make a cluster, like starting to stack up against one another. Then I'll put a red box up there, like, yeah, price is gonna take a pause here, one way or another. So that's all. NVIDIA is fine. Oh boy. Yeah, NVIDIA is fine. Same thing, triangulation here, NVIDIA. Why is it? Because of this, the stock, split stock price. So extend. So same thing, triangle here. Now from here, what we do? Triangle, we just look for five-way move to the upside. Okay. So what do we have? 5 up, 2. So what are we looking at to the upside? We can do this. So we have 5 up, 3 down. I'm looking for 5 back up. Now, if we take this high of one, which was 140.76, you've already cleared 78.6. That was the 100%. Upset 127 and 158. This is where that would be the next price target for NVIDIA. I mean, I could open up, this is a 1-hour chart. So if we do 1, 2, we can do 3. Which one is this one? 3 versus 1. It's 165. 365, and here's your 161 point and 190. So you have two zones. You can do this. So we can do, so your support is gonna move from here to here now. Is where you have, and then we're gonna make one box here. I don't really need to do that much. We can just focus on this one for now, and then if NVIDIA come up with the strong earnings, so they still have earnings coming up. It's not next week. It's I think it's the following week. And then these are the upside projections for NVIDIA. Well, I don't know how long it's going to take to get there, but so now what we need to do is to see, are we going to fit 5 smaller waves to make this 3? Okay, so let me do something like this. See, because price did break above this resistance, hasn't back tested yet. Like didn't come back down and retest that zone. So it's always a good sign. You need a breakout, you need a back test, then from here you resume back to the upside. That's the healthy breakout. I'm not saying it's a fake out, but NVIDIA has a pretty steady stock. So you get rid of those. Now you're gonna fight your life over the smaller waves. Is to see. I'm gonna do this. Make it a little more bigger. I don't even know if it's gonna start at 2 yet. Let me see if I can count 5. A bit more. 1, 2, 1, 2, 3. Yeah. Let me see. Could be just do this. Come on. See. Some sort of a 4th wave. You see how Fibs works on NVIDIA? I'm telling you. I know this stock really good because I own it. 1, 2, 3, 4. Just do like this. So you have this. I'm gonna make the thing a little bit more brighter. Make it a little bit more bigger. So I'm gonna make this one green. So let's do this. Okay. So here's your NVIDIA zone for now. So worst case, if it breaks 146, you can look for this. So now you have this support. Okay. So we have put our zone 1 here and 1 here. So that 144.42, which is this high, will give you the 38.2 retracement for this. So this 4th wave can be a little bit, if it's gonna take a little bit of a breather, or this could be only a 2 as well, because you can just, doesn't matter because corrections are very damn subjective, because all you're trying to do is just trying to fight these smaller waves. Now what if this is all of 1? So there's always too much ways that you could do that. But when you are in a trade and if you're doing this, that's bad, because you keep changing your wave counts, like because you think like this is 4, I can get one more push in 5, then I can get a 3-wave drop, or this is all a 1, this is a 3-wave drop. Then if you're doing this while you're in a trade, you should not be in a trade. You don't even have a plan. Okay. Because all you're doing is just like twisting around, moving your strikes back, back and forth, assuming like, this is a 4, I'm gonna have a 5, I'm gonna be like something like this. Because either way, everything is, the wave count looks right and is valid. So do you think like, okay, if I enter a trade here, I can get one more push. If I exit my trade here, fine. Well, then you exit a trade here and then all of a sudden start trying to move higher. Then you're like, oh shoot, I should have made it as a 1-2 here. Instead of I was just looking for the fifth wave. You see, like if you do this, you don't, I don't, I hate, it gets on my nerves when you change in your wave count. Okay. You don't do that to yourself. It's very difficult because it is already emotional game to play every single day. On top of it, you make it more worst by changing labels left and right. I know a couple guys that do that. Oh, we're in a 3 or we're in a 4. Okay, fine. Work could be anywhere. I don't care about this. I'll give you this. That's all you have to look at. How is this subdivision is going to unfold into a third wave? Okay. Which is stop loss right there. Okay. So how we gonna get here and how long is gonna take for price to get here? We don't know that because we always trade the unknown. This is a 1 hour wave count as well. It's the same thing that I just did on Tesla. Okay. You want to buy Tesla calls? Okay. And then you don't, because the premiums are not cheap now. Okay. The way the stock is moving. If you want to buy it, Tesla calls, you're looking at 350 and 360 strike price. Okay. And what you're looking for is 322 to make a continuation if the price is going to run, is to get to 360. Tesla, it will get to 414. The way this thing is going, okay, because it has cleared this high, and this mark, keeping this at a 313 market cap, this is ready to go after this sideways consolidation. And to me, this I only have this thing here as a 5 for now because the fundamentals for that company is not gonna line up for me to make it as a 1-2 count. It will go as a 1-2. I will tell you that. You don't consolidate for that many years. It's just to make a one small five waves to complete your fifth wave. Look at your wave count. Look at the size of this fifth. 447%, which is your wave one. 447%. And you telling me that you're going to move from here to here only 135%? Really? Doesn't make sense at all. Your wave 5 cannot be that short compared to your wave 1. So this is your wave 1, 2, up in 3, and then you have a sideways nasty looking job. And here you have a price that is starting to make a move. I mean, this thing, it can run. This guy has played a really good political move, okay, under a Trump card, and it paid off really well for him. One guy is desperate for money, selling ads and selling everything possibly he can for his campaign. He comes in, he sees the weakness. Elon, I will support you, because he can see his stock has been struggling for many, many years. Anybody can see it. Stop giving guidances and, whatever the promises that he's making, which is fine. Future looks perfect. And he says like, okay, I'll support him. Gives him what? 30 million, 100 million, whatever the price is. He made like what? 30 billion, 100 billion or something in return in a matter of 1 week. Election ended on Tuesday night, and 3 days he made billions of dollars over the millions that you only gave a couple $1 million to him. Look at the return that he got. Oh, 100%. 100% excellent way. This is the excellent way that he found a way to pump the stock. So this entire move up is not based on fundamental. We know that, right? They just report their earnings. This is the stock. This is a move is only based on Trump victory. So this stock has literally become a political stock now. Trump will make sure for the next 4 years Tesla will be fine. Remember the monthly RSG that I showed you? You remember that or no? Tesla's gonna outperform Mag 7 next year. I can tell you that. I'm not, well, we'll see if I'm gonna be right, but this stock ready to go. Because I know the monthly RSG on Tesla. I'll show it to you. Sorry, I'm just eating some pancakes. My wife just left me here. Went to the store. Nah, one shot. You need a stomach to hold this. Where the heck it went? Right there.
You guys help me get my gear one.
See? This is the monthly rotation of Tesla. We think the stock is going. And look how far it is from the benchmark. This stock is gonna rip hard in the next 4 years. Any pullback on Tesla, buy it. We'll just wait for it. This rotation will take several years to play out. Keep that thing in mind. Okay? This weakness that Tesla had, good. You don't have to go too crazy, but you have to define your risk. Okay? Yeah, he has other business. Of course he is. He's gonna be in the Trump administration. Okay. You think that Trump and Elon Musk doesn't watch Tesla, is not going to watch Tesla? Tesla got punished with Democrats for the last 4 years. Okay. Look at General Motors. In the last 4 years, look at General Motors. Because they're all union workers, and Trump supported them. The Biden supported them big time. Last 4 years, Elon Musk has never stepped into a White House because he was never invited. Now he's going to have a free pass. He can literally walk right into his office, sit in the Oval Office, and just, okay, here I am. He's going to be in the administration for the guy who's going to be running the show now. You think that he's gonna tank his own stock? Think this way. Play the game right. Play the game. Play the smart way. Look at the overall picture. Okay. Look at here. This is millions and millions of portfolio managers in the world are watching this. I manage a pretty big amount of manage money for a couple guys. I make my adjustments based on this. Look at the distance of Tesla from the benchmark.
I'll count down. I'll count down.
This was 2024.
All in going in a race.
It's 2023. When did Tesla started to become? I'm going to show you this thing on rotation, then you will know. Let's go to 21, right there, right around.
Oh wait, are you? He's not there. He's not there yet.
21 mid, 21
You're there.
around in June, July. This one back in 2021 is when Tesla started to go toward the weakening quadrant.
All right.
And toward here. So this is all what you see here.
That's what we said.
What's that? Tesla.
Yeah.
Here. Okay, all these weakness here. But on the bigger time frame, is all playing out here. It's a weakening. See how it's starting to get close to the benchmark because the momentum can slow down. So this way, the Tesla won't take the price won't take that big of a beating. If a stock starting to get closer and closer toward the benchmark, it loses alpha. Okay. Meaning the momentum is weakening, but is getting closer and closer to the benchmark. This is your main benchmark in S&P 500. Further away you are, you're going to have a much bigger hit to the downside toward the lagging quadrant. When you're going to be coming out from the side, away from the benchmark, making a way up, is going to have a much bigger move to the upside because you have more alpha. Momentum is improving now. Okay. So from here, I'm just going month by month here because this is a monthly rotation. See?
Help. Me?
So where we at here in 2023 is when Tesla went close to this benchmark. Okay. So that was 2023. 2023, right in the middle. So 2023, that's the move right there. See, April, this entire move up. This is where 96% upside.
6 seconds left. Go, go, go.
So this one
Just reset.
made that move. There you got the rejection. You see this hook starting to form there. This, you don't want this. When you have a rotation that just went from lagging quadrant to a weakening quadrant toward the the lagging quadrant to a weakening from toward the lagging, and then you need to form the hook because you need to go clockwise, right? You can't go back way, the anti-clockwise. So you need to for this hook right there, it needs to form. It has to go up. It needs to pick up momentum. It has to go clockwork like this to complete the rotation. Look, I'd fight it right there. Next month, this month, lost momentum. Next month, starting to move back up. Boom. This is where the key decision of Tesla was made, and that these 2 months, which is as a matter of right at the end of the year,
Got it. I got the red.
2024.
Put in the red one.
You see how it changes? Then here comes the decline, month after month. Now this month, this hook right there, which you see, this is your current month that you're in. This little dot right there, make this thing a little bigger.
I keep going. No.
Now this little dot that you have back here is your previous month. It's a month before, a month before. That's a 4-bar. I have this thing as a 4-bar. Okay. 4-bar is, you can see a 1 full quarter. Right? This is your current month. 1 month, 2 month, 3 months. 3 months makes what? 1 quarter. So that's how you look at a monthly rotation. You could make a tail bigger. I can make this thing to 8, 9 bar, but that's not the point. You can do that. I like to keep them here. That 4-bar is the ideal way to, and the right, I mean, you can make a tail bigger if you want to look at more rotation, but this is good enough. So this is where the 2022 mark, and now we have this downside. There you go. Now here we are. See what's sitting here? Here comes November. This is the month that we're in now. You see the length right there? Because the month started and now it's improving. Now, remember, when you have an RRG, okay, that was rejected before, meaning that it's supposed to go this way, right? Because it has to go like this. Once you have a rejection like this, and you go back toward the lagging quadrant, this time you're gonna go. Because rejections on the RRG never happens twice in a row. If this goes up, if it loses momentum, it goes back down, it's gonna go right back up again. Because the point is, this rotation is gonna go like this. It can never go like this. That's it. So you need a stomach if you want to be invested in Tesla. Now, nobody wants to buy it here. Nobody wants to buy it here. Now everybody wants to go full port here. You see how everything works? Nobody wants to buy anything down here because it's going to 100. Price came down to 138.80. Everybody, there is literally everyone was saying that we're going to go right back to 101. But nobody wants to buy or pick anything here. Now we're here. The stock is 29% from all-time high. Stock had just made a 30% move in 3 days. What do you think a 29% is for this stock? Think about it for a second. Nothing. Buy Tesla and hold it. It'll pay off. If you're going to have a 20, 30 point dip, add a little bit more. Just wait it out. this is coming into a play with Trump. I can, I mean, this is you see, this is exactly what I see right here. This is everything. You want to be invested in a longer time frame for next year, you should have Tesla in your portfolio. Just, I cannot give you any kind of financial advices and stuff, but keep the Tesla stock in your portfolio for the next 4 years. Do not sell it until Trump leaves the office. This guy's going to be working in his administration now. He's going to be start cutting some whatever the whatever he's. Do you know yesterday Trump had a phone call with Zelensky, Ukraine president, and he was on the phone call with him. Think about it for a second. One president talking to another president, and he's in the middle. Nobody else, but he was. I mean, that's some serious power. All he did, gave him 50 million. He played a very good political move. If it would have gone other way around, oh, there'll be another 4 years of punishment. Good. You should hold it. If I can hold a position on Apple, Microsoft, NVIDIA over 15 plus years, what is your excuse? Just tell me that. If I can hold a position for 15 plus years, what is your excuse? One of the greatest companies. Because you're afraid the stock can come down 20, 30%? Or you just don't have the stomach to hold? You're just looking for a quick pop, cash your money, run. Are you that kind of guy? That's different approach, but NVIDIA now is top of the mountain right now. You know that? Look at that. $3.62 trillion market cap. And I saw yesterday a guy on Twitter comparing NVIDIA chart with Cisco. Man, it's sad. You know, it's sad. I don't know if you live such a lonely life or something, or you bored or something, or but I don't know. There's Apple, Microsoft, Google, Google and Amazon fighting neck to neck. See, Google went up yesterday. Amazon came down to fifth spot yesterday. Saudi Aramco, Meta, here comes Tesla. 103.
Gee, no, no. Shoot, man.
Yeah, once you hit that 1 trillion market cap, yeah, it's gonna be um,
Let me damage you.
you
Let me damage you.
have a pretty good chance you're gonna get to 2 next. Look, Meta is almost at 1.48, almost, I need another half to get there. You see?
Oh, what is this? Wait, what's this? Oh, I'm invisible. Wait, I turned invisible. I'm like invisible. Mhm.
There's two ways. I mean, I don't wanna. I know how to buy Tesla stock, okay, but I don't know if some of you guys have enough cushion, they don't have enough account, you have to break them down into a position, certain levels. It's the only way you can play the stock. You gotta have to have shares, okay? Keep the shares in your hand. Leave them alone. You don't have to worry about those. Now, once you have those shares, let them work, but at the same time, you play with options. Either you do leaps, either you do vertical spreads. You know, leave those ones. Now, if you book profits on those ones, now keep in mind that price goes up, your share goes up, so does your option position goes up. Correct? And then if you have a stock comes down, obviously your shares are going to decrease. But you always can add few shares more, right? You don't have to keep dumping money into a same stock, but talking about picking a few shares on any decline. Now, Tesla is like you can give them a 25-point gap, a spread, and you just buy shares. What I mean by that, now if the price is 325, so you buy 325. If the price managed to get to 300, okay, you buy a little bit more at 300. Now your average is what, 315. Okay, so you can improve your average this way. You don't add anything in a very small window because when the stock moves, it moves, right? So you can make you can make either a 25-point spread or you can make a 30-point spread. But a lot of time this stock goes either 200, 250, like this. So now the stock is at 325. Let's say you want to buy 325, but let's say you want to buy 10 shares. Okay, at 325. So you buy at 325, 10 shares, now you're long 10 shares. And stock comes back down to 300. Pick 2, 3 more, or even do 5 more. So you don't have to add another 10 back, just leave 5. But if you can either leave them at 325 and you can just pick a leap at 300, you know, so if so then the leap that you have or the spread that you're going to have depends on what delta that you do, you could now your shares are at 325 that decreased in value. Now the price is at 300. You put an option trade on. Okay, that option trade does manage to push to 315. You make money on that trade, right? On the option trade. So your 15-point gain is going to offset pretty much half of your loss on the shares. Now you half down. This is the way you got to hedge this stock. Okay. So if it gets to 300, okay, so now you bought them at 325, you pick a couple more shares at 300, you throw an option position on. Now if the price gets to 275, it depends what we have to look it up to see how the wave count looks and where the fib zones are, whatever the fibs that I show you to the downside, those are your targets, those are your retracement levels. Is where you says like, okay, I'm gonna buy a little bit more here. And the overall picture looks good, but it's just a matter of waiting. But you don't have to like put your entire life saving into a certain stock at the same time as well. You have to work on your risk management as risk management as well. But the point is like stock has upside. There's a lot of political. I'm not sure about fundamental reasons. Like from a political standpoint of view, this stock is gonna perform pretty good next year or so. You know, so the game that he's playing, he's going to benefit his company and his stock the most that he left behind for the last 4 years. So you should take advantage of that, you know. But at the same time, we have other trades going at the same time as well. So you keep hedging, you know, and and I tell you guys so many times about that 70-30 rule. Okay. You should seriously either think or consider doing it because it works. Okay. Because it works for me. And I'm pretty sure that it works for you as well. But you just have to give yourself some time. If you have the point is like, oh, the market is gonna come down 10-15%. Nobody knows that, first of all. Okay. If it does come down, your portfolio man your depends. Not every stock gets hit hard. Okay. It's not it doesn't happen that way. So there's a lot of stock that's just gonna go sideways instead of taking a hit with the market. Not every stock will respond the same way across all 500 companies in S&P. So if your 70% side does manage to decrease, okay, of the the capital that you have options. Okay, options are hedging against your long-term portfolio. Just remember that. Making a wealth out of full-time trading is very, very difficult. It will take you years. You have to adopt a strategy. You have to back test them over and over again. And then you have to see what kind of a results that you can get. Just have to spend hours and days and nights just to learn the technicals, you know? And then from there depends what kind of a risk that you're willing to put on a board to see what kind of a return that you can get. I mean, it's not easy. It's a lot of work, and it takes time. People don't have time because they have their needs. They want money fast. Screw it. Tell me what to buy. I'll buy. You sit, do all the work, fine. Just give me a trade. That's what mostly people looking for because they have their own. They have their own jobs and they have their own priorities and stuff in their life. It just at the same time, you can't just sit and throw money on the board because one stock moved 5, 6, 10 points one day and you're not part of it, you know, or you missed out on a big day on a market or something. I mean, okay, I mean, your time will come. You don't have to be in the market for every single upside move or downside move, you know. So you have to just work on um, some change your some of your priorities and stuff for next year. You will see you will do well. I mean, I'll help you. I mean, as much as I can, but I'm in such a small 6.5 hour window, as soon when the market opens, and I've got list of things to do, you know, and I want to find trades. Finding trade takes time, and I want to, and I'm looking for trades, and I know what to look for, and I try to find a good entry and to see if we could, you know, get some upside or whatever the downside is. But just try to, I try to just ride trends, not to fight against the trends. That's just a hard way to trade. It's a dangerous way to trade. You know, respect the trend, ride the trend as long as it lasts. If it fails, okay. Now, if you're in a downtrend, okay, well, now you're fighting against the downtrend. Because this, I mean, I could pick bottoms, I can come really, really close to it, but picking tops is a little bit challenging, you know, unless I have a cluster of fib resistance starting to stack up at certain zone, then I'm kind of gonna say like, you know what? Yes, this is just almost there now. But one or two individual fibs, nah, never, never. It's very, very hard to call the top. Bottoms are much easier because bottoms has a certain retracement levels, 38, 50, 61.8 and stuff. And then you could those are not that difficult. So here's a here's a scan. Um these are the stocks right there in a daily time frame. Okay. This is a signal right there. It's what I have spent months and months, okay, writing it, back testing it, giving a hard time to Optima day and night to help me to to have some certain conditions on them. This is it's called a mean reversion, meaning that it triggers only at the bottom. It has a very good return. I've taken them, I don't know, so many of them over the years because I've back tested them. I can't just write a script and throw them up on the board and just start throwing money. I gotta test them out. So it takes. So what I do, I have that thing all saved in there. So I do run scans, um, and then it scans all the S&P 500 stocks, and it tells me that which stock has almost near the bottom is where the price will be, you know, to make a reversal. Well, it doesn't promise you that it's gonna go here, the whatever, but you can expect a pretty good return. It works really well. Okay. So there's some stocks that I ran yesterday. The screen happened to be open. Um, at the close, because I run a lot of scans as soon as the session ends, because I like to see like how many stocks made 52 weeks high, how many stocks this month has managed to put a monthly higher bar, so it scans everything after the bell. Like before it shuts off, I kind of have a idea of like how overall market is doing along with the index, of an S&P. So there, these are the ones that triggered yesterday. But again, it doesn't mean that every one of them is going to be super perfect, but most of them will. Put it this way. This one has they have a pretty good return. Yeah. I mean, I personally have taken a lot of them over the years. Um, so there are a few stocks. I don't know this company and stuff. Here's like this one is not showing right. No, I just scanned it again. Let me see. Okay. Man, why does it change? Okay, this one. These ones are called mean reversion signals. meaning that the bottom hits a certain price, and then it has to. I gotta. You're not gonna understand a lot of things, so just look for this blue label. Okay, but now what is showing versus when the last time it triggered, you can you can see what kind of a return that you got the last time from it. Okay, so these are the only stocks in the S&P 500 at the yesterday close on the daily time frame. Now remember one thing, that it doesn't trigger often. They're very, it has to meet multiple criteria until this when this thing is going to trigger. So there's, what the heck is this? American, do the name here. It doesn't mean that you can get some return for sure. You can play 4 or 5 points, whatever, if you wanted to play. This is a daily bar, anyways. So you need to like at least you can try to attack the previous day high or the 2 days high or whatever, you know. So we could do this. You can do that way as well. Let's do this. Show you the American Electric Power Company, AEP. So stock close at 96. It doesn't, it's a $1 move or whatever, you know. So you can always see the last time it triggered on this bar. So you look at the upside from this. It doesn't mean that you get the exact same one, but the point is like you just, that's how you see you got almost 4.6% upside since this last one that triggered. There's few of them will fail, but for a couple days it's gonna show you that move. Here's American Tower, AMT on a daily time frame, triggered one yesterday. Last time it triggered here, so you got 1, 2, 3 days of upside. So again, I mean, if this is the case, the worst case, like what you could do is you could draw your fibs from this one to this level, and you can just look for at least 23.6%. Right there, this 208. You know, so you had 201 on American Tower, as the American Power can go to 208. It's possible, you know. So it could take 2-3 days, but these are daily bars. But the point is like, Dev, you can grab a few points or whatever, or you can actually start a position on a certain stock, that company that you've been following, and it happens to give you the bottom signal. You see right there, this one triggered here, got it, but took another flush down, but now it triggered again. So it's coming close. So this stock, whatever that is, CMC Energy, is starting to form some sort of a bottom here. So when you have multiple, like after a couple days, because it's looking for those certain conditions to met, because if it met here, it triggered. It didn't met here. It didn't met here. It did meet, and then it meet here again. So it's getting close. Here's a good one that I like. It's Campbell. I might take a shot at this one. I was thinking about this one yesterday. Let me show you this. This is in a one, it's in a fourth swing right now.
Let me see now. Hold on. Let me see if you
Clean this one up a little bit. This is in a fourth swing right now.
All right, sit down.
Campbell Soup. So if we do this, you see it's sitting at a very sweet spot, right at that 78.6. I mean, it didn't really touch this print, but it is just pennies away. So I was thinking about taking a shot, right? I mean, upside print target here is 49 on this stock. So this is the
give me a second.
swing,
Hey,
know.
sit down, sit down, sit down, sit down.
So it's a good, I would consider this one. There's your 78.6. I mean, it can come back down, but I hope it shouldn't, because this bar right there, daily bar, is where this signal triggered. It has to hold this low now. That would be the ideal, this low of 44.87 should hold, because because it hits on a certain bar after all these conditions gets met. So it's 44.87. Worst case, if it comes back down and retest this 78.6 retracement, that's always going to be a last resort anyways. You know that. If this holds right there, should be able to get some upside, So I would consider this Campbell Soup CPB. Monday I might throw a trade on it. Just to see if we could get some upside. So this is one. DTT Energy has 3 of them. You see, it's trying to look. It's an 8th swing right now. Very high count. A lot of these energy stocks, and this funny looking, whatever the energy companies. GIS, look at this one. General Mills is right at that. It's got to be at 78.6 for sure. Oh yeah, I can tell. There you go. Boom. That's the one to swing. It's perfect. I haven't got the upside print yet, because I think it's taken a, this is to the large. Yeah, the stock is under pressure. Yeah, it's a big slide. These two days of back punishment.
Furniture game.
What is it? Is it right here at this 78.6? Well, in a couple days or two, if it can hold this 78.6, because if this cracks, you're gonna go right back to the lows. If it goes right back to a lows, the swing is wrong, because this second swing must stay above first swing low. The same thing with the wave count. When you have 5 waves up, your second wave, it cannot retrace below your initial wave count from the low. So it's the same thing here with swing. If this thing goes and if it doesn't move, if it doesn't starting to recover back up from here, it's gonna have further weakness. It's gonna take out this. So the point is, like, where are the prices at 65, 65, 62? That's 3-point risk. I mean, I don't know the upside, but let's do this. We can take this low to this high. My fibs are kind of messed up right now. Hang on. So from here, you see, you can just
It says it's restricted.
at least look for this upside.
Oh.
From this low, this is where this trigger is toward this 67 and 68. But the thing is, this took a huge dip right there. The last 2 days of punishment was pretty hard. But it's a pretty good risk trade.
Is the consumer staples in the improving quadrant?
Which one?
The both Campbell Soup and General Mills are the consumer staples. Is consumer staples in sector? Is it the RRG is improving?
No, I have to look at the RRGs. Wait, I have to look at trade. I'm just going off the signals. It has nothing to do with RRG yet. These are the you see, like you have to just scan only handful of these stocks out of 500s is because these are the only stocks that they met their condition. Because now these are very rare. It doesn't trigger that often. Like, look, what do you see here? The last time it triggered back here in June. You see the difference, the gap between the time. Look at this one. Whatever, ICE. They're very rare because it is the way I have this thing written, because it's looking for multiple criteria it has to meet to for this thing to appear. Look,
Trade.
what is this?
Wait, can I see the
Aligned
can I see the
Energy,
dough?
L&T. Look at the last one. Up in field. Look at this one. See, it hits on this daily bar.
Trade.
And look at this upside.
Trade.
But it doesn't. But look for how many months
First.
you don't see this until this daily bar. I know what it is because I'm the one who made it.
After you're done trading with them.
Here's what is this? It's all energy garbage. I don't know. Realty income. Pair Pepsi. So here's this. It's coming close. See, they're stacking up like this one. See, this is on a daily bar. Second day, next day, another day. There's another one. Then got to move up. This one got a bit of a move up. So it has some upside. Doesn't mean, I mean, not every, you should not have your mindset that I want to enter a trade and it's going to hit a jackpot. That's not the point. Your point is to make 40% return on your money, whatever you pay for the premium. That's a beautiful trade. 2.89, but these stocks are, so Pepsi is, okay, let's take a look. So Pepsi has resistance hidden right there at this low of this swing, which is 166. Stock is at 165.11. So you got a 1 point here. So now this resistance has to break.
Can I see the dough? Can I see
Okay.
the dough?
It made a move back up, you see, and then it failed. Every time you're going to take out the swing low, it's going to become your resistance on the way up. And every time when you're going to crack this swing to the upside, on the way down, it's going to act as support. So keep an eye on Pepsi. Southern Company. Look at this. I'm telling you, some of these, they don't trigger that often, but they have excellent return. This is on a daily time frame. I don't play around this with a shorter time frame, which is a little bit more messy. Here's VICI Properties. And here's this one. It's in a first swing down.
Yeah.
XLEM 124 stock. So now this one is going to have, you see this wave, this is the fourth swing, and this is your third swing. Low right there. This one is got, this guy gotta clear this. These two. See? So it has a fail swing. So the fail swing, once you have, it has a very good probability it is going to start a new swing to the upside. And it did. As you see right there, becomes number one. And then look what happened.
Wow.
It failed. It took out this low. and becomes 1 now. This is going to become 2, then another 3. So you just play a very short term, but this is going to be a tough one because you have some crazy resistance in here. You see right there how this one went down, finally got the retest right there. So keep rejecting because right at this low. Yeah, this zone is going to be a bit difficult to clear. Okay, but this thing triggers really good on ETFs. I can tell you that. And there's only a handful of ETFs that we have, but I was talking to this guy, Optima, last night, and I showed him. He was very surprised and kind of shocked. I'll show you one thing. This is the same thing that I'm going to show you on S&P 500. Next time I'm going to tell you this, you buy. Don't even look back then. Let me see. This thing. Okay. Here's an S&P 500 cash index. Here's your low. Here's your high, right? For this year. I want to give you this one. Watch. Look at the upside. But from this bar, only when this signal triggers. This signal works really good on indexes. Here. This low right there, when the signal triggered, 14% upside. This signal triggered here at this daily bar, 13% upside. This signal right there triggered right here on this bar,
All right, come here.
5% upside.
Come on your Xbox account.
It works really good on indexes. This is the third one it triggered this year. It takes a very long time though. But S&P do get some of it. I think this is the last one for this year. That's it. I don't think you're going to see another one. You need a dip. It's not going to trigger it on the upside. You need one of these, something like 4 or 5% dip. See, nothing triggered here, but it did here. It doesn't come that often. I can tell you that. When it does, next time I will let you know. For sure, I promise. Here's SPY. It's going to be the same way. QQQ, nothing. This was a failed one, as a matter of fact. That's the good one. That was a good one. That's exactly where the year low was. 395 on January 5th.
Here, can you help me drink?
You on the Qs.
All right, come here.
Nothing here. Even these dips came right there. I have this thing set on a daily time frame, but nothing triggered here. But the SPY it did for some reason. And S&P.
Ow!
Look at this.
I don't want that.
It has very good return. Here's diamonds. Only one this year. Nothing triggered ever since. I was kind of surprised because diamonds do kind of follow S&P, but value, I mean, look at this. If when I see this, gotta go in. Here's IWM. I mean, again, we don't, the,
I'm invisible. Wait,
the point is that
I'm invisible.
when this triggers here, or whatever it is, just, I don't want anybody to have big high hopes. When it triggers here, this entire price action is all blank, right? We don't know that. It's all a blank chart. But when what I look for, because I can see this price structure until here to this daily bar, because until the next day is going to be all blank, right? We don't know how these candles is going to appear or bar is going to appear. But if you take this low to this low, and that's your high. And if you take this, okay, and manage to play 50% of this initial decline, that's where the signal triggered, don't you think that's an excellent return? I mean, this is almost above 78.6 from this high. But it's still a nice return, right? But if you're even planning to say like, hey, I just wanted to buy shares because I really like this or whatever, you can hold shares because these conditions, once it will made, is not going to give you the same thing anytime soon. I mean, whichever way, I mean, I have my wave count, I can count stuff on the way up, how it works, but it's something. It's helpful, saves me a lot of time, but I spend a lot of time, and I have to back test them to kind of see what return that I could get on them, and it picks up at the bottom. So these are called the mean reversion bottom signals, and that's what everybody wants is the best possible price on anything that you wanted to own, right? And that could appreciate in value over time. So that's what it is. Here's the thing. I'll show you a few slides that we're gonna get off. Weekly. Okay, monster move. Yes, we agreed. Market had a big move, right? This is actually a fourth, 1, 2, 3, 4. This is a fourth weekly outside bar of this year so far. Remember, the outside bars, they engulf to the previous bar. So I don't know if we're expecting a full reversal. No, I don't think so. But the minimum downside we could hope for, we could expect is 58, 78 of this week. This whatever week was high was, but that doesn't mean. I mean, I don't know. These are weekly bars, so you just depends where we open the week. Can we just push another week to the upside? It's totally possible. November is the strongest seasonality month of the year, so don't fight it, especially after what I just showed you. You don't get that little move right after that blue signal that I just showed you. It stays up for some time. Just something, because outside bars are not very common bars. Okay, they don't appear and you don't get to see them that often. So these are only 4 of them this year so far, from the year low right there and to the high. So that's how we ended the week with an outside weekly bar. Here's VIX, okay, and here's your S&P. This is an overlay. So this is a year low right there, year high. This was a spike on volatility right there, or whatever the yen carry trade. So that was the spike in volatility. That's where the price sold off. And this was the pattern right there until the election, right there. This high, and this. And then I'm sitting watching this. I was like, here's one, here's a second one, here is a third one. And we have elections are right here. I already had this thing sitting. So this is where we close. A day before election on Monday. And there you go, that's the gap. So from 57.82 to 58.68. And then another 3 days up. So this thing is still there. So at the same time, if you connect this high to this decline, take this support, connect with this low. See, they all lines up pretty well. So you draw this line and you connect these three highs. So you basically, what you're doing is you're connecting three highs on the volatility and you're connecting three lows, high to lows. This is your high right there. That's your lower high. No. Higher low. And then you have this, so you just connect these lows. And this, look how volatility got crushed back to 15. So buying puts, well, you want this thing to reverse, this thing to fall back. Volatility is because premiums are dirt cheap right now. Because they were holding premiums for 2 months, meaning they kept the VIX at 20 to 22 range for those 2 months. And a lot of people were hoping for that because of the previous time election was the dip first, and then that next day the dip got bought. That was a previous election. And this election is just a one-side rip that didn't even reverse. You know? Because that time, last election was the initial dip, and then overall the futures were pretty heavy, like they were open, like, to the downside. And then as soon as the bell rang, and then 15 minutes later, the market made a full reversal back to the upside. So that doesn't happen. That is just a one directional move to the upside. Tesla is fine. The same signal here. Those that I follow. Sometimes they fail. Again, there's no such thing, but some of them they go pretty good. There's one triggered here. Nothing here ever since. Because I run scans after the close anyways, so you probably saw this one on the Twitter as well. This was the oversold RSI. And look, now it's overbought. 5 period. Here's in November. See, in November, is the strongest month of the year. Not December. December is still cools off. Because this is where you're gonna have your tech selling. A lot of, the hedge funds they sell to offset some of these gains or whatever they're gonna do with some hedges and stuff. So, November is very strong, but I don't know if this move. But remember, we talked about this November last Zoom call. I talked about this day. Remember? So where we at 5.54. Last year in November, we were at 9.5. In 2022, we're up 10.95. Okay. November is the strongest month of the year. Just, well, I understand that everybody had a massive hopes for September being the worst month of the year, but it had happened, right? But when you look at November, and then at the same time you have the election, they both lines up pretty good. But then at the same time, when you're looking at a seasonality to start off the month, and then right on the first of the month, I'm posting this thing on Twitter to wake up and buy something because you have an oversold RSI. Like, how often does it happen? You have an oversold here on this bar. You have an oversold here on this low. You have an oversold here at this low. And you have an oversold reading here at this low. But and look what happens. So what are your odds here? Is to the downside or to the upside? I'll bet to the upside all day. You have three confirmation here prior to this one appears in front of you. But you take your chances to the downside, you're a fool. What makes you think that this thing is going to go like this? What, negative RSI? Doesn't even, doesn't make sense. And you have this. Now, all you have to do now is you take this, merge with this, and then you take the blue one. I'm bullish all day long. This is one screen, no wave count, nothing. Daily bars. You have few things here. No wave count, no swings, nothing. Just make you a couple odds that you could possibly find and to see like what would be my initial next move in the market. You take this, you connect with this, and then you connect with this. That's it. So you see a 1, 2, 3. You have 3 confirmation. With the screen telling you is to go long. But if you are happen to sit in with the hope with this, could be right. You can be right. Don't look at this way that I'm the perfect one. You can be right, but your odds of being right is very, very slim against these 3 points that I just showed you. So your odds are 1 against 3. If it would be 2 against 3, I would say I would consider. So like, you know what? Yeah, it's a good odd. Not 1 against 3 though. No way. Chances are very, very low to be right. I can show you other things as well, but just to spend some time here on this slide. Read the screen. Nobody in the world knows where the top is. You know, or S&P hit 6,000. I mean, it could be a top. But what is a catalyst for this for this decline? But we're just, you know, approaching the end of the year. So we're just ready to wipe off everything. I mean, I don't know what your take is, but it's the quarter, it's fine. This back-to-back years is fine. SMH, Bitcoin. Look at this. Bitcoin is good. I'm almost there. I gotta hit my 80,000 target. It's close, very, very close. 77 to 49, like shy of 2,500 points or so. It's 80 some change. I cannot really stop the thing there, but yeah, somewhere around there. And then 80. Yeah. We're close. Very good entry on this. I was very happy. This is the same thing I did on this trade. You know, at a fail swing, I have 2 RRG sitting in the lagging quadrant, ready to go toward the improving quadrant. I know the fail swing has a very, very high probability is going to make the full swing to the upside, meaning to, you know, to take out this high. Then I was showing you a couple of weeks ago and whatever that, you know, we need to break this. And we did, you know, we did here, backed off. So like, I got 1 here. I'm good. Staying long. You need to take out this high. You're going to take out this high. You take any dip from here, you're going to clear this line. Okay. It's going to get cleared one way or another. But quite a bit of a fight. Came back up, retest. Beautiful. That's perfect. Cannot ask for more. Okay. You need a retest. This is very good sign if you get the retest back to the breakout. Then you load right back up. You know, when you break like this and you keep going, you can, if the price accelerates fast and there's a lot of buying momentum pressure is on. But most of the time when you get a breakout, you need to come back down to retest it. Okay, this is very healthy. And then from there you resume back to the upside, because this top, there's so many rejections here, just has happened. Eventually it's going to get taken out. It's just a matter of time. But that time right there is giving you these guys right there, these two, telling you like, yeah, it's picking up. It's gonna go this time. It did. It's good. Bitcoin can extend. We don't know where this first swing is. I know some of you wants to know targets all the way. I can give you all those, but just get here first. Then we'll open more upside. We're going to 100,000. We're going to 250,000. Just some of these tweets people puts out, you know, just, I don't know, do you even think before you post anything? Give people big hopes, you know? Yeah, I'm not saying that we will. Bitcoin works really good, especially with fibs. I know that. Let's get here to this number first. This is a 127 extension. Once we'll get there, I'm gonna see a couple closes here to see how daily bars react in this zone. And if it's trying to accelerate more to the upside, then I can open the more upside toward the 161.8 fib. If it's trying to backs off, but I want to see this because this rotation right there will eventually turn around. It's not going to stay up here for a bit and a long time. Weekly is fine. Weekly is doing good. But this one is gonna take a bit of a turn because it's in a smaller time frame, but they're good. Momentum is very strong in Bitcoin and it's picking up is good. So this first swing can rip all the way to 100. We don't know that. So don't sit and assume that. But let's get here first, then we'll worry about more upside. Tesla, man. Tesla 30% right now. Wow. Crazy. It's a matter of 1 day. 1 day, 30% rallied. You know, it's crazy. I think we're done. Couple scans and stuff. I'll do that later. Weekly, what was that? Daily is, look, all swings are up. Every single one of them. So betting against or trying to be a hero or to pick a top is not going to be easy. I mean, I could take a shot, but it will be very small. Don't size up at any full size position and try to become a hero to become a top. You start small and see if you get, because VIX is at 15. Okay. That doesn't help. Swings are all up. Okay. Monthly bar is higher, but it's just a matter of bit of a breather. Yeah, it's possible. But doesn't mean, well, I don't know if we're willing to just wipe. I just don't see it in November. November is a pretty strong month. We only have 5. I mean, it's supposed to be at 9 to 10% compared to the previous years we just looked at them. Weekly is, look at the size of this weekly outside bar. Huge. Look at the same one here. Diamonds. This one actually had a higher bar, Qs. But S&P, look what that's, what will the price, look at that SPY. Last 2 weeks, it's the weekly bars. Last 2 weeks is making lower lows. And look what Qs was doing. 2 weeks sideways. Was not making new low. I mean, it was just 2 outside weekly bars. This is very rare. Side by side for 2 weeks of price action, especially for the Qs, to stay sideways for 2 weeks and then got the rip to the upside. This one was actually putting lower bars. This one right there, one lower, this one ended up being, because this sell-off right there that triggered, I don't know what was the news, whatever thing was. This sell-off that week triggered, that ended up being an outside week. Look how IWM managed to stay in the inside week. And look at the dip here on this one and this one. But this one managed to stay it last week with an inside weekly bar and then got the pop right there. This was bad. Remember I was talking about it here? This was down for 9 straight days. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, 9 days. I remember I showed it to you this on Slack. 9 days. You got a one big, that's right. this is very rare. You have a Dow, this is 30 most valuable companies in the world in this index. And is puking for 9 straight days in a row without a single higher bar. It's just you don't see that anywhere. You see, like you get like 2, 3 days of forward upside, and then you just the downside, and you're just gonna reverse. Like some of these daily bars, you just have a bit of a sideways consolidation here. You see, like this is days of job right there. And this right now is like start looking at like 7 here, then 8, and then like 9 days. And then finally got the move up here in the 7th swing. This is the first swing. IWM is gonna be good. I like IWM. I think lower rates is gonna help this index over in the finally. It's near the highs now. I think this wave count is gonna have some room to run. It should be good. Here's I'm gonna show you some of these fibs and stuff that I run. Okay, I want you to pay attention here, okay? Then we're gonna shut off. This is a yearly bar on SPY, Qs, IWM, and Dow Jones. 1 year of one bar. Okay. This market has done nothing from the last 3 years. I want you to remember that. Okay. This is COVID. No, this is 2022 bear market that we had. Okay. And this is the inside year. Last year was the inside year. It's just so I was 100% positive this year on New Year's Eve, like when we close out the last day. When I looked at the close of this candle on the yearly, like when we ended the year last year, I was like, I'm gonna be freaking bullish as hell next year. You know, I was like, we're closing a year with an inside bar right near the highs. A year before high was 48.18. This year we're closing at 49.93. I was like, we're gonna push to make a new high. We're not just making a new high, so we're gonna make some room to the upside because we've been sideways for 3 years. This is the year that I don't think that you're gonna get anytime soon. Like to expect this kind of a return and S&P up like 25%. It's just that there's so many things that I was watching, and it's like I'm a buyer on every dip. And there goes your AI boom at the same time. And then Nvidia took off and all the other stocks are going up. There you go. I mean, doing pretty good. I mean, we got few speed bumps. I mean, those are a couple months like back and forth price action, and some of them are, we had 2 dips this year, 5 and 10%. So things are shaken out there, but those are just a regular correction. But the point is to 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 position yourself for the entire year is bullish. So just buy the dip and just wait it out and let it play out over time. So, but the point here is like you consolidate for 3 years and you manage to go one single year. I don't think so. But I'm gonna buy it on if market retraces 10, 15%. Oh, don't, I'm a buyer. And I can show you this S&P 500 chart all the way to 1950s, if you like. These are yearly bars. These are your dot-com crash. That's your COVID crash right there. The massive outside bar. So the point is that you probably, none of us were, I mean, I don't know how old are you, but I don't have to go back to 1950s and give the world hope. What are we looking at? But I'll just give you two clues. Okay. What I will give you is this. I want you to look at this range here for 3 years. And I'm going to give you this range for 3 years. Just tell me what you see. Market consolidates for 3 years. Okay, it did it back in 1980s. Why? Is because this is an outside bar, this is an inside bar, this is an outside bar. So you have 3 years of basically nothing. And then finally, market managed to move, trying to move higher. The same thing what we did here. Higher bar, outside bar, inside bar. So this last 3 years with the whatever the people have COVID crash and this and crash, sorry, the bear market that we had in 2022. I mean, and then it recovers everything, but it's just the bottom line is the market's not doing anything, has done nothing. Now it's breaking out. So people who are sitting and drawing their imaginary, the beautiful lines, this is the top. How you want to see it? I'll show it to you. This is the high. This is the top. I mean, which one you want to pick? You want to go back more? Can do that. You want to come all the way back? I mean, you just, I mean, look, I don't have anything against no one. Okay, don't get me wrong. But if these lines right there, okay, were too good to be true or too perfect for every one of us to well define our tops and our bottoms, I don't need anything else. I'll just sit here and draw lines left and right? You can do it as well. I can tell my 10-year-old son he can do the same thing. Sit here and draw lines. Try pick this top to this top and see where you can end the line. That's going to be the top. That's it. Crash is coming tomorrow. Clean everything up. 19-year generational cycle degree trend is ending right there at 6,000. Boom, that's it. Liquidate everything. The world is about to come to an end. Do you even think before you talk? you know, it's just, I don't understand. I'm just confused too. Yeah, I don't know. I mean, just, I've been an individual independent trader all my life for the last couple of years that I get to engage with a lot of traders now and get to talk to them. And it's just a lot of crazy. This is a one crazy word for sure. I started trading when Twitter was not even around, believe it or not. There was no Twitter that time. You know, there was no Facebook. I don't even have these fancy software that time.
Mo, can you show monthly SPX wave count?
No, I'm just, I won't get there. here, that's what I'm saying. Like, pay attention here, what you see. But again, I mean, I'm not saying that the market cannot come down 5%. It can, of course it can, and it will. Okay. It will for sure. Can it come down 10%? Can it come, it will at some point. But I'm just showing you the bigger picture here because we're approaching the end, of the year. It's how we're finishing up this year so far. But it's just, I mean, the low is in, top is here. It's just a matter of like how much more upside that we could get, and then where we close. So the close is going to be important. That's what I will be watching. But if the same time, when you look at here, look what the small cap is doing. You want to talk about your line. What do you think the small cap is doing here? Small cap has upside. That's what I'm saying, that these lower rates will help them over, in the coming months. IWM has been a painful ride to the upside, but you have to look at this way. IWM has made two lower lows, two lower bars, okay, for the last 2 years. Okay. But if you have another down bar to take out this low, your yearly swing is going to turn down, meaning that it turns under 3 bars. So if you have 3 lower lows for 3 years, swing will turn. Now these swing directions are all up. Why? Because what happened is it had 2, but it didn't break below 161.67. It managed to clear 205. Now it's at 238, close to 244. Don't you think it has a pretty good chance now to taking out this 244? I think it will. It's almost there. So you're looking at a very big picture. But when you look at a big picture, it's easier for you to paint a smaller picture. You cannot work opposite, meaning that you sit and draw your 1 hour wave count and then you go back to a daily and weekly time frame, and that is all. Wait a second. Now I'm confused. You look at bigger picture, then you look at a quarterly time frame, then you go to a weekly time frame, then you come down to a daily time frame, then you come down to 195 minutes is a half day chart. Then from you take you down to 1 hour chart is where you're going to find the swing play on a shorter time. But you have to keep the bigger perspective in mind, that what I've been looking for and what I should, what I could expect for, to happen. This market is just breaking out. Just people don't see that. It's just they're either clueless or they just have no knowledge of technicals, how they work. Look at this. This is just breaking out. I mean, I told you this thing before, and I will repeat it again for you. Market indexes and ETFs never forms tops with the double or triple tops. Never happened. I just showed you 3 years of prime. I don't know how many people have blown up their account in the last 3 years. Stay invested and just buy the dips. This market has upside. You don't consolidate for 3 years and just go up for 1 year and just reverse right back down. Just I don't see it, but if you wanted to think that way, that's your. I mean, again, people have different opinions. There's nothing wrong with that, you know. I totally respect that. I mean, somebody can have a different way of looking at things. I mean, that's fine. There's 1,000 different ways to look at technicals. I mean, that's not the only way that I'm showing you. But if you, the way I see things and the way I manage money, and I want to make sure that I want to keep you guys on the right side as well. But I mean, I think most of the calls that I make and most of the trades that I do, they end up being right than being wrong. That's all. I mean, I want to be right more than I can. I mean, I know that I will be wrong. I totally get that, but I know that I will be right way more than I can be wrong. I'm that confident. That's all. Loss don't bother me at all. No loss has ever kept me up at nighttime. I'm willing to accept my loss. I'm wrong, I'm wrong. It is not a crime to be wrong. It didn't play out, fine. We'll find another one. It's not the end of the world. But I'm not gonna drag months of losses and a year of loss. No way. Yeah, I don't think so. I will not I'm not gonna let that happen. I'll work day and night if I have to, but I'm not gonna put a dent on my portfolio. I'll find something. I have a lot of tools. This thing is flooded. It's just a matter of how much I wanted to trade and when I wanted to trade. I can run many scans if I want. I'll find trade. That's not a problem for me. It takes time. That's all. Okay.
So can you go over monthly SPX wave count? Can you show it to us to see the
Monthly
long-term projection?
is right here. This is, when was that? $16 when S&P was. $16 back in 1950. So if we take these monthly bars and I mean, you have wave 1, wave 2, up in 3, down in 4. I'm just looking at this as fifth wave to the upside. So the fifth wave to the upside, I mean, we have channeling support that we could the channels that we can use. We can take the .com with the COVID crash. Okay, connect these two, place it on the top of the up here on the top. That gives you the range, that gives you the zone, the upside projection for the fifth wave. Okay, so we can use those. And then if I go here and count this, 1, 2, 3, 4, and now how is this fifth is going? Well, I don't know that because this thing right there just looks like a three-way move. And I know this thing for a fact that this fifth wave, okay, which is this from this wave 4, it cannot be a three-way move. You need 5 to make a 5. This is an extended wave. Okay, shorter one, extended fifth. I told you this thing before. Shorter one, extended fifth. Smaller one, extended fifth. What has happened before, since 1950s, before any of us were even born, will happen again. So when you have a wave count when you get two extensions on your wave 1 and in a wave 5 of your 3, you're going to get a same extension in a fifth of a fifth as well. It has a lot of room to the upside. I just can sit and assume whatever you want to assume, but market has a lot of room. No, it's not out of gas yet. So what I'm trying to do now is, because what you have to do is you have to just look at this. This is $16 when S&P was back in 1950. Here's your extended fifth wave against your 1. Here's your extended fifth wave against your 1. Here's going to be another extended fifth wave against your 1. Elliott is the most fractal strategy out there in the world. That's why it's freaking so amazing. It's a repeating waves. That's all it is. It's what makes, and you wanted to find months like previous months, which you can make, like merge 2 months to see if I could get the same month out of it. Because market is repeated. Whatever is happening right now has happened before, right? You heard about this thing and you should know this. So whatever the market is repeating or whatever the way is going has happened before. And I just showed you this. What you see in here, what the upside that you're getting after 3 years of consolidation doesn't mean it just ends here. Why doesn't it end here? Because this cannot be a 3-way move. What if we're just doing a 1-2 count? Think about that as well. That's what this is. This is a third rally. Did you think that way? Instead of making this, what about we just do this? 1, 2, 3, 4, 5. Here's your 1. Here's your 2. Now you start your third wave. You can do that. There's nothing wrong with it. These two right there paired up really good. This 2 right there pairs really good with this. That's a totally valid count. You have a completed 5 waves here within your 3. We just put 1 here and 2 here. Now you can just count this as a 1, 2, 1, 2. Sorry. I'm gonna go back. You make this as a 1, 2, 3, 4, 5. Here's your 1. Here's your 2. What if we just we are actually going up in a third of a third right now? You think about this? It's possible. Totally possible. There's nothing wrong with doing this way as well. But the point is, like, you have people who is actually trying to convince and trying to tell the world the top is in. It's just the wrong way to put a statement out. What if I will do this? People just kind of, you want to see the upside or you're bullish, I mean, I don't know. I mean, do you expect the Trump economy as S&P that is going to 3,000? The guy is going to be watching stock market like a hawk. I can tell you that. Don't you remember his last the previous term? This market is going to take a punishment the minute he's going to announce new tariffs on country. Market's going to get shaken out right away. Always does. He's gonna see that. Then at nighttime, he's gonna put up a tweet or something. The futures are down. He'll pump the market back up. He was doing the same exact thing before. The minute he put a new tariffs on China, then China, what he's doing, they start cutting rates on they start playing with the currency, devalue the yuan with the repo market. Because China fixed their rates every 7 o'clock Eastern time. Sorry, the Central time. Oh my God. So what time am I on? Yeah, Central time. Sorry. 7 o'clock my time is just when they set the yuan price with against the dollar. So they're moving that part against his tariffs. There's gonna be some show coming. I mean, with him, you know, the way he is, but he just, I don't know. I mean, to me, if I would have to make a case, you know, I mean, if I would leave this fifth wave open the way it is, I still have upside. Okay, I can still do that. If I have to go a bit more as the one I just showed you, making this as a 1-2, okay, as a 1-2, 1-2 count, I'm open to that one as well. So it doesn't matter. You make a 1-2, 1-2 count, or you just going from this low right there all the way here to complete the 5. If you do that, you still only have 3-way moves here. You cannot have 3 in a 5. 5 is a motive wave. It can only have 5 waves to the upside, called motive wave, to complete the 5th wave, or could be a ending diagonal with an overlap with wave 1. 4 has to overlap with your wave 1 high, and then the prices has to contract into not the way you just want to draw your lines and connect these lows. Now you connect this low to this low means nothing. That's what I'm saying. These lines are so damn perfect. Teach me, because I want to learn. That's the only thing I couldn't learn all these years. Trust me, I don't know. I swear to God, I don't know how to draw a line. Show me. Show me how you draw a line. I want to know. You want to do it like this? Okay. You want to take this low? Okay, well, now draw this one. Well, then you want to sit here and draw this line. Well, then you want to make it even much better to draw this line. Which way you want to draw? Let me know. I'll pay you whatever you want, whatever your price is. Teach me how to draw a line.
So Mo, if the S&P fifth wave extend to match the QQQ fifth wave, which is in your projection, October 2027, is it possible that the SPX could go like 16,000?
Could be. I mean, the cues that I have here on a monthly time frame, but you have to remember this, that the cues goes back only to 2002, right? It could, I have to look it up and see, you have to Google it or probably to see when the QQQ ETF was launched. Okay. They will have the initial open price. According to the data, I have a October 2002. That's a lot of time, which was 19.76. So you have to look it up and see when the Qs was up. So anyhow, this wave count here is the most cleanest wave count. You have starting it from 1976, wave 1, wave 2, up in 3, down in 4. That's your bear market low. And now you're looking for what? 5 ways to the upside. We just hit almost there. 522. It was kind of close. But right here in this 479 into this 552 kind of window. Then we're going to have some bit of whatever. The ideal would be 678 kind of area zone, somewhere around here in the middle. Then you got this fourth wave. Then you got the fifth wave up. Just that doesn't, I don't know how we're going to go up. I have these projections based on, 700, 708 is the 5 versus 100% relationship of this, which meets here. But just to make it at 700 is what I am looking for on cues by next year or so. So, I mean, the way this thing is going, I mean, it was 312 the last time I posted this thing on Twitter. I was up like almost, 65, 70, which is this? 66.16% now. There you go. From here. From 2002. I'd save some of these bookmarks. Oh my God. Where the heck it went? I saved that bookmark. Whatever. It's on my page. I retweeted it as well. Oh, I think I did this here. March 25th of 2023. That was right at 311.57. That time I had the minimum upside target. I wasn't expecting the AI boom is going to come into play this year, to be honest. I thought we are going to have a pretty, like a steady kind of upside, but the AI boom came into play. That boosts the tech really quite a bit. So this is the same thing. It's here. Here, same thing. See? Same 417, 22, 250-ish. This shows a little bit different ratio. See, 61.8, 166.47. So I was just saying, because I always have higher the bigger time frame wave counts, because I need to have this to make the smaller one works. And then this one right there is just happened to, I was like, if this is a 3-wave decline, this is a 3-wave decline, and we're ending the year here after reversing this, and then I looked at S&P 500, which ended the year with an inside yearly bar last year. I was like, this is the year to go long. There's so many, because there's so many ways that you could look at this, and I was like, it's just, Where is the one that I actually here? Because I looked at this thing. Let me show you this. This one. You see right there, December 31st of 2023. That was last year. I always do that. Look at this. On December 31st of 2023, since the 1950s, okay, S&P has closed the year with an inside bar for the 7th time. Think about it for a second. 7th time since 1950s. The previous 6 times next year was up each and every time. This. Look at the rate of change. Inside bar, closed was almost flat here. Inside bar, next year was up. Inside bar, inside year, next year was up. 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 You know how easy to make a bet to the upside here? It's just gonna go up no matter what because it has happened every single year. I've showed to everyone. That's what I was running these scans to the making my next year kind of like a predictions. Like what I think about next year. Are we gonna have a bear market or are we gonna have a bull market? That was just one of the most easiest year to to predict and to like, to make a call on it. And the same time, this one, see then when I posted this one on December 31st, that was almost what, New Year's Eve, I believe, when I did this. And then on January 1st, this was at 219, as the time shows right there, is this one. Okay. Now this is the yearly candle as well. Now look here of this candle. Okay. And look at the next year. But the point is like this was inside. Okay. Now look at this candle. Same little head up on the top. Look at this. And then you look at the same candle right there. This was 2023. I said, like, we're gonna have a green candle, and it's a good year. No complaints. Look at this upside. Ugh. What's the .com? Right there. This is the .com. This is the housing, Lehman Brothers collapse. Yeah, this is right there. Because 2006 is when I started. I was around this time around here. 3 months or so when I started, this is when the market crashed. I was like, what the hell is this? I was like, I'm not doing this. So I mean, it was crazy. I was really new to the market that time, and it was breaking news. It's the way the market was selling off, like, whoa, thousands of points is dropping in a matter of minutes. Dow and S&P took a massive plunge. I mean, it was a nasty, nasty sell-off. Currency market is going crazy. Volatility spike big time. Panic is just banks are shutting down. They just have no money left. Bailouts and this because so much steep selling pressure is on now, and finally from here, that's when Obama came right there. And then Obama did all this until then he left. Then Trump came. That's when the COVID happened, right here, I believe. No, here. I'm gonna go to the different one. Yeah, right here. It's the COVID. He pumped the market. Not quite a bit, recovered pretty much everything. And he left. Then 4 years of Biden. But the point is that that's a COVID right there. Recovered everything, went all the way up here. Okay. And then Trump left. Biden came. 1 year, 2 years, 3 years. It's his fourth year. So market did manage to get upside. There's a pretty nice upside here from this low to this high, but we still stayed in a range for 3 years after COVID. Market hasn't really done anything. I mean, I understand that you could make a pretty big, nice returns here as well, but I mean, a 3 year mark. I mean, same thing here. What are we doing here? Yeah, when you see this kind of what I showed you on the other one as well, you don't see this much often. Let's look at Dow. Oh boy, stay in place, buddy. Come on. Oh, the ETF is not going to give me that much of a data. Gotta go to the index. But you see, like the trend, the point is market trend, okay, goes like this. It takes a pause and it resumes back up. But now you telling me this, that we stay like this, we go like this, and then we go like this. I don't think so. But if that's what you wants to believe, that's different. You 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 betting I would make this bet. You don't, I mean, I wouldn't say you don't, but some normal, like accumulation, distribution, and a market different market phases. It's just, I mean, here is it's a clear three-wave correction. Yeah, one move down, leg up, another move down. It's just three-wave correction. There's your yearly trend goes up in 2010, 11, 12, 13, 14, 15. That's your trend right there for years. So how much money people have lost being short, okay, in a range bound market on the last 2 years? Well, this is the problem that most people don't study bigger time frame time charts. When you have a triple top, look at this: 4808, 4818, 4793. What does that tell you? S&P is going to top here with a triple top. Really? When did that ever happen before? Market is fractal, right? When did that ever happen before? Come on. There's too much data. That's why it just shrinks the price. Here, That's the only time I can see it. 140, 196, 149, 32, and 144, 36. And look what happened after that. It's 3 years right there. And what makes you think that this thing is going to happen like this? Okay. I hope you learned something. I really hope you learned something. Trade what you see, not what you think.